Hi guys, thanks for tuning in to another episode of Nuggets News or Trader Talk with Charting Man Dan. How you going, Dan?
Good, how are you?
Good, thanks, mate. Bitcoin futures, it's the talk of the town. I know we've certainly both been looking up the specs and how this is all going to play out. And what are your thoughts leading into this trading in the next couple of hours?
Well, for me, what's really important is the action leading into events. And I was doing a video a few days ago, and I said, as we were making that run up to 19,000 on GDAX, I was saying, can we really keep this up for 3 more days? Because I had it in my mind that, we're going to get extremely inflated, and then they're going to use that to short. But the way things have played out, we've already hit that climax, and then the market started pricing in this fear of these futures coming. So in my opinion, the past 3 days of that 25-30% pullback has significantly priced things in. And my outlook on what to anticipate would be completely different if we were just hitting 19,000 tonight rather than having just consolidated for 3 days. So I'm still bullish Bitcoin. This daily chart looks really nice. I'm looking at the GDAX chart and the lower wicks off of 14,000 3 days in a row. This is very bullish consolidation at this point. I almost feel these futures tonight are going to be a non-event. And that's because the market priced things in.
Yeah, and I think on social media we see those stats about the time it took for Bitcoin to rise each $1,000 increment, and it's the same with the corrections. If we were waiting for that correction after this run up, it's already happened. It happens in less than 24 hours. We've had a 30% pullback from 19,700 already. So as you said, I think this is going to be another kind of non-event, and during the middle of the week people will kind of be looking around saying, oh, this didn't really affect things. So do you want to talk about a little bit what futures are, and do you want to dive into that, or do you want me to touch on that?
Sure. Well, I mean, just futures in general historically have been used as hedges. And just a basic example would be for farmers. I enjoy farming myself, but let's say you're a farmer and you have a giant field of potatoes and you want to lock in prices, because that's a huge risk. If there's a drought or anything like that, it can ruin your whole crop, and then you're ruined as a farmer. So there's got to be a way to hedge risk. And with futures, you can lock in a price, and that hedges against that risk. And it's actually an interesting take where I've been learning on it a lot more, because we had a former member who has left the chart guys, and he's starting his own futures market for the trucking industry. So the trucking industry does not have a futures market right now. The shipping industry in the Baltic Sea does, but he's using blockchain technology, which is very interesting to follow this guy with his, it's a multi-million-dollar startup, and these future contracts are going to significantly reduce risk for these shippers and these truckers that are taking on this risk in terms of locking in futures prices. So it's a way to hedge against risk, and honestly, that has led me to believe, and others, that the futures contracts are going to be a way that people that are bullish Bitcoin would probably go short. And what I mean by that is, if you're a miner or you're a long-term investor and you're holding 10, 50, 100 Bitcoin, taking 10% of that position and going short with futures contracts is a really good way to hedge your risk, because if Bitcoin keeps going up, you're going to lose on your 10% and you're going to make a lot of money on your 90%. And if Bitcoin goes down, you're going to lose on your 90%, but you'll still be making money on that 10%. So it's a way to balance things out. And I think it's going to end up reducing volatility a little bit because of that fact. But I don't think that we're going to see the kind of reaction that I was anticipating. If we're going to run up multiple days and $5,000-$10,000 leading into this event, it's a completely different scenario, like I said, than what we have right now.
Yeah, I completely agree with that. About in the farmer scenario, producing potatoes, it's the farmers that want to hedge their risk, and in the Bitcoin world, it's the miners that are the producers of the Bitcoin that want to hedge their risk. So the other thing I guess we should speak about is the fact that this is cash settled. So it's not going to increase demand at all for Bitcoins with the basics of supply and demand. Unlike if we have an ETF, they'll be required to hold a large amount of Bitcoin, but futures, they're all cash settled. So again, this is interesting because who's going to be trading this? If you're going to be shorting this, and the circuit breakers and the volatility, that's the next thing that I'm a little bit worried about. So if we look at the individual contracts, CBOE have said that they're going to have those 10% circuit breakers and then 20%, and they'll shut down trading for the day. And CME is 7%, 13%, and then they shut it down altogether at 20% as well. So that's what I worry about. If this is going to trade 5 days a week, what's going to happen over the weekend or intraday when these things are moving 10 or 20%? And how is this giving accurate price discovery if they've got to open up or down 20% on a Monday after a weekend move and trading? It's always going to be a day behind. And do you have any thoughts on that?
It's definitely a very valid point. Even we're seeing that now just in terms of, there's blockchain stocks out there, but GBTC is one way that people in the market have been trading Bitcoin. And if you're holding over the weekend, you have insane amounts of risk where it's going to be trading 48 hours at least with you unable to do anything. As a trader, your hands are literally tied. And that is a situation that I never want to be in. So it is going to be very interesting to see how these markets that are only going to be 5 days a week are going to be able to deal with this 7 day a week phenomenon that 24/7 trading is not really something that we've seen in the stock market in terms of comparing it to. But it's all very new, and everybody has an opinion, and opinions are a dime a dozen in this space. So it's so important to just wait and see how it plays out, and to be cautious and protective, but to not give in to fear or any emotions. The chart's going to tell us if we're dumping or if we're bullish. And right now, the daily chart is telling me that everything's just fine in the world of Bitcoin.
Yeah. Okay, so a few other things we should maybe mention, those margin requirements. So if you want to trade futures on oil, you only have to put up a tiny bit of capital because the oil or foreign exchange currencies, they don't fluctuate very much. So they'll let you leverage maybe up to 50 times. But what we've seen so far from the brokers, they're sort of saying 35% margin requirements, 44% for CBOE. TD Ameritrade have come out and said that they're going to have 50% margin requirements, I think, Interactive Brokers. So there's no way that the big boys can use a lot of leverage to push markets around. I think the brokers are very aware that this is very risky stuff. Some brokers are not even allowing shorting because this can create a cascade. So if you've got an account and you're trading a lot of different futures, but then all of a sudden you get margin called for Bitcoin, you might have to sell some gold or some oil positions and other things to free up capital for these margin calls. And in the world that we live in, where everyone's trading on big risk and big leverage, we don't want to start another financial crisis or a cascade of events because of Bitcoin has a 40% correction. Everyone gets margin calls. So, any thoughts on that, Dan?
Yeah, I mean, that would be a great way to ruin the reputation of Bitcoin, blame Bitcoin for a financial crisis. I don't foresee that happening, but it is definitely, we've seen, these brokers are not dumb, and they know that this is very high risk, so they're going to be a little bit more protective, and that's what we're seeing with these margin requirements and just the little differences that we're seeing. And the way that these are shaping up, CBOE is looking like it's going to be more for retail traders, just because the contract size that you're going to be required to purchase, one contract is 1 Bitcoin. Whereas for CME, one contract is going to be 5 Bitcoin. That's for more the institutional trader and a little bit more of a bigger fund. So I'm going to be looking at, I think that's how it's going to be split up. And CBOE will be able to get a gauge of what retail is thinking. And then CME, obviously they're going to be fairly similar to each other, but that we'll know that that's going to be institutional more so, just because of the more capital that's going to be required to trade it. And just to touch on that, for people that might not be familiar, what a contract is with those cryptocurrencies, it means if you're buying one contract, that's on 1 Bitcoin versus 5 Bitcoin. Just like if you're trading options for stocks, you're buying one contract and it's worth, either 10 shares or 100 shares, depending. Normally it's 10 shares. So it's just a way to differentiate the two from each other, CBOE and CME, and who's going to be utilizing which.
Yeah. Well, mate, I'll maybe finish with some thoughts on where the market's going, but personally I think that it's not going to work at these low levels. As I said, those 10-20% circuit breakers, I don't think futures function very well at these low prices. And that to me is, I'm inclined to think that they're going to let Bitcoin run up towards 50,000, or even once Bitcoin's 100,000, these futures start to work a lot better and they can start to stabilize the price. Whereas if we're down at these levels, 10K and Bitcoin's jumping up and down $1,000 and those circuit breakers are getting hit every day, it's not a good product. It doesn't serve any purpose. So I actually think that the higher the Bitcoin price goes, the better it functions for these futures traders. Then we have that stability, then it leads to an ETF. So I'm certainly leaning towards this being a positive thing overall.
Yeah, I would definitely agree. And I think in the immediate short term, the positive impact will be people tonight. Everybody is saying, like, what's going to happen as soon as they go live, thinking that there's going to be, the switch is going to flip and there's going to be some event. I don't think that's going to happen. And I think people are going to say, okay, well, nothing's happening. I want to get back in, because the people that went cash to avoid this are going to be getting back in now. So I think 14,000 holds on GDAX, we're fine on Bitcoin.
Yeah, cool. All right, mate. I appreciate picking your brain as always. So happy trading, and we'll talk again soon.
Absolutely. Thanks for having me.
Cheers, mate.